Okay, this is the Insurance Experience with Caleb Owens, and today I'm with Lesley Powell. How are you today, Lesley?
I am doing very well. How are you?
I'm doing really good. We've had a really enjoyable chat before we went live here, before we started recording. But it's really, you're a really interesting person. Really like talking with you. Lesley, if you don't mind, can you start from the beginning? Tell me as much history as you can. Just tell me where you came from and how you got started.
Absolutely. Absolutely. I have worked a lot of different jobs, but I have always had there's always been something that I've wanted to do in the insurance industry. And I didn't realize that really until I got into it and I dived in the deep end. But I didn't realize how much help and how much that we can do for other people in the insurance industry. And I think a lot of people too, they say insurance is something I pay for, and that's really all they know about it. But there's so much to it, and there's so many opportunities that we have to help people, and it really is a beautiful thing. But I have a law enforcement background. I am an ex-flight attendant. I was in the medical field for 10 and a half years. I worked the emergency room as an x-ray tech. Um, I have a registered nursing degree. I've done a lot of different things, but this is really in my blood, and I really love it.
Wow, that's impressive. You got a big background there. There's a lot of different things that you did and have done. That's pretty rare. So how did you get started in the insurance side? What happened there?
I was working at Apple. I had been with Apple for about 6 years, and it was really time for a change, and I thought, "Now is a good time to do something that I've always wanted to do." And I filled out an online application for Progressive, and I got a job with them, and we did a phone interview and a little video interview, and they were, "You're hired." And I got in and got my feet wet, and I fell in love, and I've been in it ever since.
Wow. Okay. So you work for Apple as well.
Yes, I was there 6 years, you bet.
Wow. These are these are places that people do not leave or would dream of getting into. I see you left there to go to insurance.
Yes. Yeah, I
Wow.
had done a
Very
lot of
cool.
things. Trainer, technical support, tier 2. I had done a lot of things with Apple, and I think that it just got to where I felt like it was time
Mhm.
for a major change, and it was time to do something that I really wanted to do. And so, therefore, I reached out and I said, "I'm just gonna go for it," and I did.
Wow. Okay. Yeah, that's really interesting. That's something that I don't hear that often is that somebody really intentionally wanted to go into it. It's just usually people fall into things, but that's really interesting. So you really like it then, I take it as well, from what you
I
said.
do. I absolutely
Wow.
love it.
Okay.
Policy services was great. That's a great opportunity right there. In policy services, you're really the front person. You're on the front lines of the company. When they call in and they need help with this or that, whatever it is that they need help with, you're there to answer that phone and help those people. And there's just a lot of camaraderie in that department. It's a beautiful thing. And then I moved over into claims and I worked there for a little while. And now I'm actually in the underwriting department.
Okay, wow. Okay. So you worked all these different sides of it. So policies, that's when you're, I'm going to say selling it, but you're selling the policy. Is that correct?
I didn't actually sell the policies. The people who sell the policies are licensed agents. They sell the
Okay.
policies.
Okay.
And then depending on the policy, if it gets hit or for that, they go through different various and sundry stages of actually binding the policy. And that is where both parties agree that this is a policy, it's in stage, and we're going to go with it from that date. But no, I serviced the policies is what I did. There were things, a lot of billing, adding, removing vehicles, just trying to help customers with whatever that their insurance needs may be, doing a lot of education, showing them a lot of empathy when they would call in and maybe they're having a problem, and just really giving an ear. And I just always figure we've got 2 ears and 1 mouth for a reason. And
I like
right, I
that.
was just always there to listen to them and help them in any way that I could.
Wow. Okay. That's really cool. And so you worked all these different departments. So you have a well-rounded understanding of things and
I hope so.
okay.
I hope so. They've kept me this long, so I figure I must be doing something right.
Okay. That's funny. Okay. I think we were talking about some things that I was really interested in before. And I've talked about this kind of thing on this show before is that just the problems, or at least these some of the problems I see is that people, whenever they buy insurance, they insurance shop. So they're shopping off premiums. I shouldn't say the insurance shop, they premium shop.
Hmm.
They're not really shopping on policy, they're shopping on premiums.
Correct.
And so they're always trying to get a cheaper price.
Hmm.
And that may be great for today and tomorrow or the next year or however long, whenever you're paying a lower premium. But whenever the unfortunate accidents happen and you need coverage, or you've been in an accident with a car or something like that, or a
Hmm.
fire happens with your house,
Hmm.
that's a totally different story. And then a lot of times people find out that they don't have proper coverage, they're not insured properly at that point for a variety of different reasons. Can you talk a little bit about that kind of thing?
Certainly. And Caleb, I'm going to be very honest. There is nothing more disheartening than to see somebody get in a situation like that.
Mm,
It's
yeah.
very unfortunate. There's only so much that the insurance companies can do based on that policy. If it's not in the policy, it didn't happen, it's not there. That goes for auto side as well as homeowners, whether it's HO3, 4, 6, 5, and 8, it doesn't make any difference. If it's not in the policy, it's not there. If it's in the policy, it is. We'll cover it. But just to give you an example, a lot of times on, say, an HO3 policy, you'll have an endorsement and somebody will schedule something or not schedule it, and they'll have jewelry and they'll have, say, a $2,500 cap, right? And say they've got a $10,000 ring. That ring gets stolen, it gets
Right.
lost, something happens to it, short of it just disappeared into thin air and they really don't know what happened to it. But what happens without that being scheduled and without it being appraised and proof of appraisal on file, when that happens, an insurance company can cover you at that $2,500, but the rest of it, you will not get indemnified for that or you won't get paid for that. And it's the same with contents. It's the same with the building structure, coverage Bs, other structures. If you do not have the coverage, they cannot pay out, right? So if you're premium shopping, you're doing the wrong thing and you're doing yourself a disservice. Okay. The insurance company is going to cover you based on whatever that policy reads and not a penny more.
Yeah. Wow. I think you said it. And you're absolutely right. You'd think, and I guess in hindsight, that if you've got a $10,000 ring, a
Hmm.
$2,500 coverage on that, you're like, nah,
Hmm.
there's a disconnect here. There's something wrong. But it's probably more subtle than that in the sense of, especially like a jewelry writer, where they can have that on their policy and they don't know how much jewelry they have. Or let's say it's 2,500 and they do have $10,000 in jewelry, but it may be
Hmm.
more subtle. Like they may have $1,000 ring or something like
Correct.
that. But there's two of them, and then there's all kinds of different things that they had, different jewelry that they had that would tally up well over $10,000, and they bought that over a course of time, and they didn't
Certainly.
really know that. And I think that's probably much more likely to happen or realistic that people don't necessarily know that they have this much in total in jewelry. And then so they bought their policy probably years ago as well.
Hmm.
I'm sure that happens a lot as people buy a policy, a jewelry rider on there, and they just leave it on there for years and don't really even think about it until, of course, someday something happens. And then, just like you said, they trying to go file a claim and saying, oh, I need all this covered. And insurance companies saying, nope, we will only cover up to this amount, and
Correct.
what you have far exceeds that. So we're not going to cover all that. So
Right.
that makes sense.
It does. And like you said before, they may have X amount of jewelry and the policy was written years ago. And let's say that they have added several items of jewelry to that, and those aren't covered either. You can only produce receipts for the things that have been appraised or a receipt from where it was bought, correct?
Oh,
And the
okay.
insurance companies can actually help you with things like that as long as we can get information from, say, the merchant, or if you can provide, say, a credit card receipt where you've paid for it. Those things are generally good enough. You cannot premium shop when it comes to insurance. You can't do it. If you're in a bind and you absolutely have to, that's fine for now, but it's important that you remember to take that into consideration. If you are not covered on something and there is a claim that needs to be filed, you are not going to get paid out for that.
Wow. Okay. What you said is really interesting to me. Is so you're saying that for jewelry that they need to have proof that they have that jewelry. If they're making claims that they have a, for instance, earlier, a $10,000 ring, They need to have some, i.e., receipt, credit card invoice, something to that effect, something proving that they have this type of ring. It's theirs. They're in possession of it. They need to have that, though, correct?
That is correct. It is gonna be asked
Oh,
for.
okay.
The insurance company, any insurance company is gonna ask for that, and I can't imagine having a $10,000 ring and at least not being able to get something from the merchant where it was bought.
You would get something, but okay. On to the next subject would be like contents. I think that this is something that is forgotten a lot in
Mhm.
property insurance is contents. It's just something that just doesn't get as much attention, I think. But contents is a big thing. It adds up to a lot of money, especially you're talking about, let's say, a 4-bedroom house, and you've got obviously content in each and every room. You had a fire or something to that effect,
Mhm.
and unfortunately, a lot of times, because this is when we come in to do our housing, is people are really frazzled at that point. If
Yeah.
they've been through a fire or some type of major event, they're really frazzled at that time.
Mhm.
And so then you start asking, or I never get involved in this side, but the insurance side is that if they're asking them what are their contents in their house, we need a list of contents.
Mhm.
It can only be a fraction of what they really know they or what they really have, because at that point in time you're trying to go through and remember how many TVs did you have in the house, how many
Exactly.
sofas did you have, or how expensive were these sofas, what were all the details with all this stuff. uh, you'd honestly be lucky to get just a small fraction of your total. And there's a lot of things that people underestimate as well. They don't really know all of what they have. But say with just laptops and electronics, you can have several $1,000s in electronics very easily. Obviously,
Absolutely.
phones would be a big one. And so those are very expensive these days. And
Yes.
then you could have laptops and you could have desktops and numerous other things in the house that add up to a lot of money.
Mm.
And at the time of the accident, it's going to be, tell me what they, from your side of the house, from the carrier side of the house, whenever they go, do they need to have, let's say, receipts? What do they need to have to prove this?
It's best. Any high
Okay.
ticket item, it's always best to have receipts or have some type of proof that you had that item in your possession. But high ticket items such as the cell phones, such as the laptops. I just bought a new coffee maker. It was $249. So if something happened and I said, I just bought a brand new Ninja coffee pot and it was $249. So it was an investment for me. The insurance company is going to say, can you produce a receipt for that? I know that you're saying it. I believe you, but can you prove it? And those things are going to go on what's called a contents evaluation form. And there's, depending on the way the policy is written, some of them you claim depreciation, some of them you do not. Okay. So it just depends
Wow.
on the way that the policy is written. But here's the thing with, I believe they're called RECs. I'd have to go back and look. But those policies, you take the depreciation off, and this will probably interest a lot of people. If they replace it or if it can be repaired or replaced, that depreciation is actually paid back to the name insured if they can produce receipts for the repair or the replacement. The other type of policies, it is not. Okay.
Oh, wow.
Some insurance companies will take 100% depreciation or what we call debt percentage. They'll take that off and then they don't get anything back for that product. The company that I work for, we do not do that in the contents unit. We don't. I believe it's capped at 70 if I'm not mistaken. But we try to look at things from the human side of things as well. And that's one of the reasons that I think that insurance is so interesting to Caleb is because it gives us an opportunity to help other people, educate them, and say, when is the last time you read that policy? If they say, I don't understand it, I've tried, help them with it if you can. If not, if they have an agent, have them go to their agent. I would suggest, professionally speaking, I would suggest no less than once a year. Every
Right.
6 months would be really nice. It gives the agent an opportunity to ask them questions that the name insured may not be thinking. For example, have you added jewelry to your collection, right? No. Okay, we can check that off. Have you bought any big ticket items? If you have, what are they? Can you produce a receipt so that I can put this on here as a scheduled item? And then they can be covered or they can be indemnified if something were to happen to them. But it's about education. You don't know what you don't know. Nobody does.
Yep.
It's
Yep.
important.
Wow. Wow. Okay. So that's really interesting. And especially, it's just, I'm putting myself in the same situation as well. It's really difficult to do these types of things if you're not in a habit of it. Let's say, like you
Correct.
said, if you get in a habit of talking to your agent every 6 months or year, and you try to go over all the coverages, any new major purchases, i.e., jewelry, or even let's say electronics, that could be very expensive. Depending on what type of electronics you're purchasing, you could be talking about all the way from a few $100s to several $1,000s in electronics. New TVs, things can get really expensive. And so you need to have receipts of these things, and
Mhm.
you need to add this to the policy, though, correct?
That is correct. And Caleb,
Wow.
too, on another note about that, how does anyone, whether it's the name insured side or the insurance side, how do you ever put a price tag on something that's of sentimental value? Your
That
great grandmother's Afghan that she made, it got passed down.
mhm.
Again, maybe a piece of jewelry that got passed down, a picture of your great grandfather that can't be replaced. So those things have to be taken into consideration too by the insurance company as well. It's looking at things from the human side, certainly the financial side of it, because every insurance company needs to stay in business. But
Right.
I cannot express enough how the name insurance have got to read their policy. Get with your agent if you need to.
Mhm.
Call in, have somebody go over it with you. It just, you've got to be educated about what you've got coverage for. If you need additional coverage and you don't know, call your insurance company and talk to them and say, I've got this, I've got that. Here's what I'm concerned about. Let them look at your policy with you and see what you can do. You may have the coverage you need, but most people don't. For example, we were talking about ALE earlier. How
Mhm.
many of these policies I've seen where people have denied ALE and they're out in the yard sleeping in a tent because they did not have ALE?
Wow, like ALE at all? They had no ALE.
Correct.
Wow. Wow.
I heard
Yeah.
a story a while back from an adjuster, and he said that he went out, he was a field adjuster, and a woman's house, it was a total loss. It was a
Mhm.
fire, and she was able to get to a store and get a tent, and that's where I had gotten that other thing that I had said before, but she and her daughter were sleeping next to this burnt down house in a tent, and the neighbors were having to give them food money, gas money. They had nothing. Everything was gone. If your purse gets stolen, your wallet gets stolen, let's God forbid they got caught in the fire, what would you do? Without ALE, you have nothing to fall back on. It's gonna take a week to get you another credit card. It's gonna take you maybe 10 to 12, 14 business days for you to receive another debit card or some more checks in the mail.
Yeah.
So what will you do? We don't think about what we use every day. Familiarity breeds contempt, the old
Yeah.
cliche, it does. But we have to stop for a second, especially insurance people. We've got to stop and think about it from the human and the ethical side of things, educate our customers and let them know, hey, you need to add this on. And then at that point, it's going to be the decision of the name insured.
Yeah. Wow. Wow. That's really an interesting story you're telling us. It's unfortunate, but it's happened. We've seen it as well doing providing ALE. And so
Mhm,
we actually have a product that we offer. It's not their product, but it's something we offer the insured as well. If they're in that situation like you described,
mm,
let's say they lost their finances, be it like they don't have their debit card, their credit card, or their cash, what have you. It's funny, but I shouldn't say it's funny, but now it's very rare people lose their phones. Believe it or
correct.
not, it's like
Correct.
they're attached to their phone.
Oh, yeah.
They may not have clothes on, but they will have their phone in their hand.
It's on their personal.
Not
You
if you get out
bet.
of that house.
That's
But
right.
we can actually provide them a temporary card so that they can go ahead and get its virtual card so that they can go ahead and get something to eat, take care of their basic human needs. And we would put all that into the ALE because it's part of the ALE, right? If you have ALE coverage and contact us, we'll actually go ahead and get you a virtual card so you can go ahead and get something to eat. You can go out to eat on the card, whatever else that they need, their basic necessities. Obviously, we're going to provide them a hotel as well so they can go ahead and get in the hotel, get checked in. And then that way, I think the first few days are really the most critical because they're really frazzled the most during those first few days. And so if you can get them past that time period where they're going from a burned down house, get them into a hotel, get them some food, and then 2 or 3 days later, they can, like you said, they can go ahead and get their new card shipped in the mail and get all their new stuff. And after they get back on their feet a little bit, then we'll transition them into a like more of a permanent situation, put them into a house that they'll be much more comfortable, especially with families. And that's what we deal with most of the time. So
Mhm.
we'll actually put them back into a house while their home is being rebuilt. And yeah, it works out a lot better for them. They actually have something to fall back on. But back to your point as well, is if they don't
Yes.
have coverage, there's nothing we can do. We can't do anything about it at all at that point if they have no coverage for ALE. So that's another one of those things on there that you want to make sure that you have, and make sure you have adequate coverage as well, because we're seeing that a lot. Is that
Yes.
a lot of people, they may have coverage because it's usually, I want to say this always, because there's so many different types of insurance, and then there's so many different states we work in. There's no one thing the same, but usually the ALE is written into the policies more like just automatically written in there.
Mhm.
Obviously, it's not always, but they'll have that. And here's the problem, though, is that they may not have adequate ALE coverage because
Correct.
years ago, back when they wrote it and everything like that, $30,000 or $50,000 was enough.
Yes.
I've even heard of some where we deal with that are 12 or 15,000.
Mhm.
It sounds like a lot of money, but it's really not. It's
It's
not.
not.
It's not long at all. The lower limits, 12, 15,000.
Mhm.
That's only buying them a matter of months. In ALE, the parts of the country vary dramatically. So you could be
Yes.
looking at the costs ranging wildly from somewhere in the vicinity. A cheaper ballpark we've seen is $3,000 a month, and that's pretty rare. But there's some parts of the country that are pretty cheap, like my home state, Oklahoma. It's probably one of the cheapest in the country. But there's a few other states that are going to have really low cost of living, and so you might have somewhere in the vicinity of $3,000 to $4,000. But then there's a lot of parts of the country that you can look at $10,000, $15,000, $20,000 per
Mhm.
month. And even if they have $80,000 in ALE coverage, it's not going to last. It's just
Correct.
not going to last very long at all. And so we'll try to do the best we can to maximize their stay. So if we can find them a year-long lease in those type of situations and find it at
Mhm.
great, we'll do that. And so we'll try all kinds of different strategies that we know will stretch everything out, because the last thing we want to see is somebody come to that end limit and say,
Oh,
okay, now your ALE's finished. And
yeah.
it happens all the time, especially now. I think mainly because the costs have gone up so much.
Mm.
For one state would be Florida, where the costs have gone up so dramatically. Just a handful of years ago, you'd be looking at, I shouldn't say Oklahoma level, somewhere in the $4,000 to $5,000 range
Mhm.
for most of the state. Not all the state, obviously, but most of the state, 4,000 to 5,000. And now it went up to 8,000 to 9,000. So somewhere in that
Mhm.
range is more
Mhm.
of your average. You see some outliers that are just astronomical, like 17, $22,000. But I would say 8 to 9,000 is much more average right now for the state of Florida. And so if they wrote the policy based off the earlier years, and they gave a $30,000 limit, which just sounds reasonable. Now all of a sudden it's nowhere near adequate. They're not
Correct.
going to be able to stay very long at all in any kind of temporary housing. And so
Correct.
that it's a really bad situation. Another thing that we encounter a lot is, especially when we're going to transition them from like a hotel to a house,
Mhm.
is they need to go and pay for their deposit.
Correct.
And it's something that there's no other way around it. They're going to have to pay for a deposit for property. So a lot of people don't have the money. Let's say that's $2,000 to $5,000 on the low end, and it can go up dramatically from there
Mhm.
for a deposit on just an average house. So they don't have the funds at all available to them, especially if they've gone through, let's say, a large event like a fire or something like that. They just don't have it available. And so we'll actually pay for that for them. We'll actually go ahead and pay for the deposit, get them into the property. We can actually sign the leases. We'll do everything to get them in, because we know down the road it's going to come back for us. If we
Mhm.
take care of people, it'll come
Yes.
back to us as well. And it's a lot more economical for them as well to stay in a house as opposed to a hotel. Because what will happen in those hotels is, let's say they have 2 or 3 rooms in a hotel, they can burn through their entirely ALE budget within no time at all, because it's
Yes.
just so much more expensive to have, let's say, 3 rooms in a hotel as opposed to one house they will go through their budget really quickly and then they're in a bad situation. Yeah, we do everything we can to try to help people. You said something earlier about people that don't have the money. And I don't hear about this mainly because we work on the property side a lot. But tell me about this whenever someone gets in an auto accident.
Mhm,
Let's say they've gotten an auto accident and they have coverage, obviously, but they don't have the deposit, and
mhm.
not deposit. I'm sorry, it's the what is it called for the premium? No, not the premium. Whenever they have to go and put a down, they have to put a deposit down. Is that correct? No.
It's like a deposit, but I think I know where you're going with this. Say, because people they want to lower their monthly cost on their car insurance. So what they'll say is they'll
Right.
say the deductible. I want $1,000
Deductible. That was the
deductible.
word. It's deductible. That was what I
Right.
was saying.
And when the customer says that to me, and I'm looking at a policy and they've got, say, a 250 or a $500 deductible, what I do is, or what I used to do when I was in policy service, I'd say, you want to lower this premium and you're going from, say, 250 to $1,000. Can you, and I know it sounds personal, but this is, I'm an insurance person and I'm a human being and I care about you. Can you, on any given day, at any given time, come up with $1,000 that's not going to break the bank? Can you do that? Still pay your other bills, still put gas in your car, still go to the grocery store. Is it going to affect you to that extent if there's a claim filed? If there is, then we need to look at some other options available to you. Okay. Because anybody who just says, okay, I'm going to put $1,000 on there, you're not looking at what the financial effect can have on that customer. Okay. If that makes any sense. Some of the policies are $2,000 deductibles. Can that person on any given day at any given time pull 2 grand out of their pocket to pay that? If you cannot, please don't do it. It's going to make your premium a little bit higher, but you're going to sleep better at night.
What what happened? And so I presume that there are a number of people that are in that situation that they choose that was my word, deductible. That's what I was trying to say.
Hmm.
Not deposit, it's deductible.
Yeah.
But whenever they choose a higher deductible
Hmm.
policy, because you're right, that will significantly reduce their premiums. But they don't necessarily have the money to pay for that
Hmm.
at the time of the accident. What happens then?
The claim cannot be filed. It cannot go through.
Oh
That's
my
a hard
gosh.
stop. That's a hard stop. You have got to be able to come up with that deductible, or the insurance company cannot make a move toward that claim. They
At
want you to
all.
pay at all.
Wow.
Absolutely not. No, it's a legal binding contract and it's in the policy.
Wow. Wow.
Yes.
Okay. I don't know why it seems so obvious, but I guess I don't think about these types of things. But I'm assuming this has happened. You've probably seen something like that where
Mhm,
someone has a policy, they $1,000, which and I've heard these things that the average American cannot come up with $400 on a given emergency,
mhm,
and so $1,000 um, deductible and they simply do not have the money,
mhm.
then their car, the entire situation, they have no coverage then because they
They
didn't
have
meet
no
that part
coverage.
of it.
They have no coverage. And
Wow.
you can sit here and say they've paid all of this insurance for nothing, and in essence, they have. However, it's still state law that they carry some type of liability at a minimum. Now, a lot of people don't know this, but if you have, say, for example, you're making car payments, right? They're considered almost like a mortgagee on a homeowner's. But if you're making car payments, depending on whether you went through a bank or not, 9 times out of 10, if not 10 out of 10, that lender is gonna require you to have certain coverages, BI, PD, the bodily injury and property damage, and they're also gonna require certain coverage as far as comp and collision are concerned. Some won't let you go over 1,000. I see that more on the lease vehicles than I see them on the purchase where they're making payments to a bank to actually own the vehicle. But it's very serious. And I know there's probably a lot of people who think that I've got $1,000 deductible. I'll give them 500 and make payments, and they can just raise my premium, say, over the next 5 months. It doesn't work like that. That's why I try to position that to customers on any given day at any given time. Can you come up with this lump sum of money? Because if you cannot, then I'm doing you a disservice. I'll do it if you want me to. I'll do it, but you're doing yourself a disservice, and by not educating you, I'm doing you a disservice.
Wow, wow. That is just I had a guest on just recently and he was telling me about a situation I never because the average person is not going to think about these types of things. We would never see these things. It's just unheard of. But he was telling me on the commercial side, whenever because he actually witnessed this himself, he said that on the commercial side, their deductible won't be $1,000 or $500. It can be $500,000
Absolutely.
or $10 million, and so just much higher numbers. And he was saying that they got into a situation or he was involved with this and he saw that the company itself there was two situations. One went bankrupt, just
Mm,
bankrupt right in the middle of it all,
mm,
and so the deductible is not met, but they
mhm.
had coverage. And his words or explanation of that was that the insurance carrier had to pick up the bill because they had coverage at the time and they picked it up. The other situation was even more bizarre is that this company, his words were disappeared. They simply disappeared. They sold
Mhm.
off all the assets of the company, sold everything, and just went away. And so he was saying that just bizarre situations that you would never experience just came up, or
Mhm.
situations where the company would not have been at fault, or they could have easily gotten out of this because of their employees would have been able to testify on this behalf or
Correct.
say X. Well, they were no longer there. There was no employees left because the entire company just dissolved. And so then he said you could not get a hold of anyone in the company. And so then all of a sudden it became very hard to defend.
Yes.
And these are crazy situations. You're like, wow, I could never imagine a company just doing that, just disappearing. But it
Yeah.
probably happens far more often on the consumer side where people are not able to meet a deductible. I mean, to me, that sounds bizarre to not be able to meet a
Mhm.
$500, $1,000 deductible. But I
Mhm.
can imagine there's a lot of people that even if they're making $100,000 a year are living paycheck to paycheck.
Mhm.
And so they couldn't meet $500 deductible. And
Mhm.
so I don't know why I didn't think of this, but they're simply out of the policy. They have no policy after that because they didn't meet the policy terms. It's in the policy. You have to pay for the first $500, and after that, your insurance will pay for the rest. But it's in there, and if they don't meet the terms of that policy, then the insurance company doesn't pay anything. So that is just wow. That's
Yeah, and
crazy to think about. Crazy
it's
to wrap my head
very
around.
sad. It's
Like,
very
yeah, it
sad
is. It
because you've
is.
got a person who's had coverage all this time, right? And they've paid their premium. They've done their due diligence. The customer has done what they were supposed to do. And then they have
Mhm.
an accident, whether they're at fault or not, it doesn't make any difference. If you cannot come up with that, you're not gonna have a claim. You're not gonna be able to be indemnified. But what you had mentioned about the companies that just go poof, it brings 2 things to mind for me. The first thing that comes to my mind is, did they have bills they could not meet, right? Did that happen? And the second thing that comes to mind is, was there fraud involved? Okay. Did they pick up and move to another state? Did they get a new business ID? Have they got a new tax ID? Did they go under a different name? Did they claim a different owner, but it's actually the same business? Yeah. So, what did they leave behind that they owed? What was the reason that happened to that business? Because I
Exactly.
find it very hard to believe that somebody just packs up and leaves, and they'd have
Right,
to have a
right.
very good reason to walk away from a business, just shut it down and say, "That's it." It's like going to the car lot and you see all these cars out on the car lot that you can buy, and then all
Mhm.
of a sudden you go it's like a ghost town. There's no cars there, you see those flags or whatever they are ripped in the wind going around the side of the dealership. That is what that reminds me of. It's you just don't see businesses do that that have gone out of business due to financial reasons that are legitimate.
Yeah, and to the point earlier that we were talking about economics is I unfortunately I think that you're going to see a lot of this happening over the next year to 3 years, as long as the Fed has maintained their overnight rates. I think their Fed
Mhm.
fund right now is 5.5, if I'm not correct. But that doesn't sound like much money or which a very high rate or anything, but it
Mhm.
is. It's tremendously high. And a lot of, especially the smaller businesses, hopefully your large cap businesses are able to survive this. But for
Mhm.
small businesses, they're really suffering a lot. And a lot of times as well, they're going to be suffering in silence because
Yes.
the last thing that a business wants to do is disclose their financial vulnerability to their employees or to the
Mhm.
public, because that'd be the last thing you'd ever want. If you disclose that to your employees by whatever means, then they will leave quickly. So that they're looking out for their own financial interests, obviously. And then, but as well, if they disclosed it to the broader public, investors could be looking at that more cautiously. So it'll almost self fulfill. It's in the sense that then it'll cause their own demise if it becomes open. So a lot of times
Correct.
they don't disclose how bad the situation is financially
Mm.
until it happens, until all of a sudden this company just disappears or just goes bankrupt. And the smaller businesses do. The smaller businesses are much more likely not to file bankruptcy and
Mhm.
just sell off assets because
Correct.
there's no point in selling and declaring anything. It's just like
Mhm.
there's nothing really left. We're down to our last penny, and they just sell off their
Correct.
assets that they have and just close their doors. But
Right. Well, there's
hopefully,
nothing in the bank to build back with.
exactly.
Yeah.
Exactly. There's nothing in it. They have no access to funds or anything like that. So it's just game over for them, and they just close their doors and they wrap up. And so a lot of things as well is we don't see these signs until it's too late. It just happens, but it may be building up right now. There may be a lot of businesses that are smaller businesses, especially. I think I'm mainly focusing on them. Is that they're going to be the ones that you're not going to hear about. The large businesses, obviously, if Apple laid
Yeah,
off 10,000 people, that will make the nightly news. You're going to hear all
absolutely.
about that everywhere. Or if Apple's even slightly decreases their next quarter profitability, we all hear about that. But if some small corner shop or some local business that employs 50 people or even 30 people, you would have no idea. You have no idea that this company was even suffering,
Mm.
and then they just go away. They just lay off their employees and just go away, and you never hear about it until it happens, and it's just done. And even then, it may not make the news because 50 people losing their job or 20 or 30 doesn't really get people that excited. But if it happens on a broad scale throughout the country,
Mhm.
this could be very bad. It could be a bad
Mhm.
situation. I know that we're seeing that as well. We're doing quite well, but it's even if we needed financial help, it's very difficult right now to get anything because
Mhm.
a lot of the banks are not only saying they increase their rates, but also they're just saying, no, we're not going to give any more financing, or your total
Correct.
cap was at X number of dollars. Now we're taking that down to 10% or 20% of
Mhm.
that. You're like, wow, what did we do wrong? And they're like, oh,
Mhm.
no, it has nothing to do with you. It's to do with X. It's just a broader market thing.
Correct. It's a part of the law of large numbers too. How much money do they have out there and what's the risk versus reward to them?
Exactly. That's exactly right.
Caleb, you'd have a like a mom and pops type place that has insurance that they're offering to people, and they don't have maybe enough time to build up, say, a large clientele of people, right?
Mhm.
It's going to take something like Ian to blow them out of business because they just don't have the money to pay out the claims, right?
Yeah.
They just don't have it. You may only have 10 name insureds under your belt with your business, but if you're paying out somewhere between a half a million dollar claims per person, where are
Wow.
you gonna get that money, right? As well as I do that those HO3s, the homeowners, the 4s, the 6s, what about a gigantic condominium complex?
Mhm.
Let's say that 1 or 2 of their customers has those types of claims. You could be looking at tens of millions of dollars, if not
Yeah.
hundreds. And then that's when the feds have to be called in and they've got to indemnify. And then at that point, they're out of their business. The business has been closed. And what we talked about before, they do not have the money to start all over again. And bankruptcy, you can file bankruptcy, but the only thing that's going to do maybe is affect your credit, but it's going to affect it negatively. So they're messed
Right.
up either way with that.
So in the insurance side, and correct me if I'm wrong, but a lot of time, if I'm not correct, they will have reinsurance. So let's say you're talking about that same situation and just too much all at one time. So they'll have reinsurance It's
Mhm.
basically insurance for insurance. They'll insure themselves, so that way if there's just too much losses all at one setting, then the reinsurance market will kick in, and so then they'll pick up the tab over $10 million or over 50 million, whatever it is that they have on their policy. They'll pick up that over that limit, and they'll help them carry on. So at least they have those available to them in the insurance market, that they have something like that. Not always does it protect them, but because you're right, you do see smaller insurance companies going out of business. This does happen on occasion. I think Florida, picking on Florida
Mhm.
again, but
Yes.
Florida's had a number of these companies go out of business. They
Oh,
seem to
yeah.
be a lot more common than other states. They just have a lot of small insurance companies that are just solely Florida. And then Florida also has a tendency to attract hurricanes, and that kind of
Yes.
can cause a large loss all in one setting. And so, yeah, that's really a bad combination. And so, yeah, they probably for that and a variety of other reasons as well. Florida has a lot of problems in the insurance market.
Too, you have to think about when we talked about risk versus reward. And here's an example that I can think of too off the top of my head. Let's say that a small insurance company wanted to insure a person's home, and this home was, say, row homes,
Hmm.
right? And they are 3.5, 4 feet from each other. Okay. One house catches on fire, then the other one catches on fire.
Yep.
So you're looking at a minimum of two house fires there. You're looking at contents, you're looking at structure, you're looking at coverage B, which may be another structure, for example, something that's covered in the backyard. Say they've got a built garage back there, they have a shed back there, some kind of an outbuilding that's also covered under the B. You're looking at huge payouts, and
Wow.
it does not take a lot for a claim like that to end up being a total loss. And then
Hmm.
once it's total loss, you can have your house appraised at a certain amount of money, right? But the market value and what it's gonna cost to rebuild are 2 completely different numbers, right?
Hmm.
So your home may be worth, say, $100,000, but it may cost 185, 190, maybe even 200
Yeah.
grand to replace it, to
Yep.
rebuild it. So you're looking at that, and those are the large numbers that you're looking at that insurance companies have to indemnify people, and they're required to do that. So you've gotta look at the risks. What are the risks of insuring a home like that? What are the risks of insuring a dealership that has cars, say,
Hmm.
exotic cars, and somebody decides that they wanna steal an Audi, they steal an Audi and they say, "Hey, look, there's a Mercedes Benz over there, let's just take that too," right?
Hmm.
So you're looking at huge payouts in one incident. So it's taking on something like that is a huge risk for an insurance company either way you look at it.
Yeah, and you're bringing up another point as well, is that insurance involved in everything. It's
Yes.
everything that we do is underwritten by insurance. Want some type of insurance or another. Like you're saying with these type of examples, is we're talking about row houses and the risks there of with
Mhm.
how closely they're spaced. And if I'm not correct as well, and like insurance that companies, they'll have calculations and say, okay, we're not going to insure 100 row houses that are all right next to each other. They simply won't do that. They'll insure a number of them, but it'll be spread out, and they're very careful at what they do and how they do it because of risk. It's back to this risk versus reward thing. They want to make sure that they spread the risk around. They're not all caught up in one area that could something could happen. But then looking at like an auto dealership as well, where you have all these cars and you have a large hell event or something like that, which
Mhm.
these things happen, and it won't just be one car that's damaged. Sometimes it'll be the
Correct.
entire lot will be damaged. You can be talking about hundreds of cars,
Yes.
and they've all been hit by hell and all been damaged heavily. And so then you could be looking at a huge insurance risk right there. But insurance underwrites everything. It's not just workman's comp. And it's so many different things that we do. There's a risk level to it. I think another thing is that, and I'm sure you have this mind frame as well, is that insurance probably helps you think differently about risk. Yeah, I know another gentleman that I've had on several times. He's really interesting, and he tells me that because he's worked in the industry so long, that he is careful at what he does, a lot more careful than the average person, because
Oh, yes.
he knows that in the stories he's seen a lot of different claims that he's worked and what can happen.
Yes.
And so he's a lot more careful. He said he doesn't like driving. He doesn't like all these things because he knows about it. He knows how risky it is and what can happen. Um,
Absolutely.
so that's another big thing that I agree with that as well. I've seen that myself. I've not been in many accidents, luckily, but I am aware of the risk level of things that can go wrong at any given time, whether your fault or not. And then you're in a very bad financial situation, even if everything works out, be it that you have proper coverage and obviously you can meet your deductible. It's still a bad situation, I would say, for most people. It's not something pleasant that you'd want to go through.
Correct.
It's a very bad situation. And he was talking about the commercial side where we hear about these huge payouts sometimes, and some
Yes.
people dream of hitting the lottery of getting hit by a large truck. When he's explaining all that, there's usually these trucks will do a lot of damage and there can be fatalities involved.
Absolutely.
It's just a really bad situation all the way around. So there's just a lot to the insurance industry. It's really fascinating, all the different things that are insured. It's almost like every part of our life is underwritten by some means or another by insurance.
Yes. Absolutely. But you thank God for it. It's the safety net that's there. Hopefully, we never have to use it ever, but
Right.
if we do, it's there.
Yeah, I 100% agree. Yeah, definitely. Because, yeah, you can imagine a world where we didn't have that. It's you don't have anything. You're in those unfortunate examples like you described of a lady that's living in a tent next to her house. Her house burned down. That's horrible. That's the last thing you want to hear about. You want to go in there and help these kind of people out, but these type of situations happen, and so that's definitely something you want to try to avoid and try to make sure you have adequate coverage.
Equally as stressful would be playing beat the clock with the ale. You do not wanna do that because going back to what you had mentioned earlier,
Mhm.
a hotel room in Kentucky may cost you $149 a night, but if you take that same hotel out in California or down, say, around the Miami area, right, or
Right. Right.
LA, you may pay upward of $500 a night for that,
Oh, easily. Yeah.
and you had mentioned the $12,000 figure.
Mhm.
Think about how quickly you're gonna burn through that. And you are, in essence, playing beat the clock with that. And if anybody that is listening to this, please make sure, first of all, that you read your policy, that you know what you need, you know what you're
Mhm.
paying for, right? But please make sure that your ALE is more than adequate. If you even think that 20,000 is adequate, I'd go for 40
Yeah.
because I would way rather have extra because something else could happen again before that term renews. Those are annual terms usually. And if
Mhm.
something happens again and you don't have any money in the pot, you're on your own.
Yep, you're absolutely right. I get I like how you say that, beat the clock. It doesn't end well, and it we rarely win that game. It's playing a game that you intend to lose because
Yeah.
it's not something that you can get into and know that you're going to lose, or not, you're never going to win that, because
Mhm.
especially with these limits, and that's happening a lot more often now, where these
Correct.
limits are just really low or inadequate from the first place. They were just you wonder why they were written so low. And maybe it goes back to like what you're talking about from the agent side.
Yes.
Maybe whenever they were selling the policy, perhaps the homeowner was trying to get a lower premium, and
Mhm.
they said, okay, I can lower your ALE. We can do all these different things. I don't necessarily know how these things happen, but
Mhm.
whenever we're in that situation and they've got $12,000 or somewhere in that vicinity, even $20,000, we
Mhm.
know from the word go, and we're upfront and honest with them that, hey, listen, you're not going to have coverage very long at all. This is not going to last. So let's go ahead and make a plan for this. So
Mhm.
we've done that with people where we say, okay, this is going to last for 8 months, 6 months, something like that. We can go ahead and get you into a year long place. It's going to run out, but after it runs out, at least you'll be in the place. You'll have everything ready to go, and you can go ahead and pay for the last 4 months of it. And it's making the best out of a bad situation. We
Yeah.
know that this is not a good situation, but we do the absolute best we can to try to come up with a strategy that works or at least put them in a better position. If they're already in the place and they've already got it, and hopefully we can negotiate a better rate, which is what we're always trying to do, is get them a better rate. Some landlords, not all the time, but I would say some landlords certainly are more sympathetic to a victim of, let's say, a tornado that recently came to their town,
Mhm.
and they know that it just did a lot of damage, and these families that are affected by it. And if you come to them and negotiate just from a human standpoint, just saying, listen, we know that you're asking this much money for rent, but this family that was just affected by this tornado or what have you, they've lost everything. Can you work it out with us where we can get them in there for a year? So we've done that and got them into a place to where it stretches their dollars out.
Mhm.
But you're absolutely correct. Is at the end of the day, if you can go in there beforehand and make sure that you have adequate coverage for that, make sure that you're going to be taken care of whenever the event happens, and hopefully it never does, like you said earlier. But whenever it does happen, at least you're taken care of. That you're going to
Mhm.
be taken care of. You're going to have a place to stay. And there's also, unfortunately, as well, a lot of people that do not know they have coverage or
Right.
do not understand it after the event. We've seen this quite often as well.
Mhm.
It's a struggle to educate people on. Is after they're going through this event, they don't understand it. They really don't, and it's like you're trying to educate them quickly too, because it's,
Mhm.
listen, we need to explain how this works, and then we need to get you into a hotel now. Yeah, they don't understand how any of this works. They don't understand that it's their money to be used for their loss of housing or loss of use of their housing.
Yes.
And they also don't, there's a lot of people as well that don't understand there's limits. They think that, I've seen this a number of times myself, where some people think that their rich insurance company is paying for their housing, and
Mm.
so they're going to get the best hotel they can possibly get into,
Mhm.
and $1,000 a night in Washington D.C.
Mhm.
I've seen this, and you're
Mhm.
like, this is not good. This is
And then you
not
can
going
put
to
them up
last.
there, but they're gonna drain that ALE.
They did.
Yeah, you
They
can do
did.
that. And they say and they may go out to dinner 4 out of 5 nights, I don't know, they might.
Yeah.
But here's the thing, you want to keep them in that lifestyle, and I understand that, and that's important from a human aspect. But if you look at it from the financial aspect, encouraging the insureds to do things like that is really doing them a disservice.
Yeah. So we tried to explain to them, listen, there's limits. This is not going to last for as long as you're going to be out of your property. We
Correct.
need to put you in something that's more sustainable, that you can at least stay in while you're always being repaired. And they just, like, some people are just really difficult to get through to.
Yes.
They literally just think it's unlimited and
Mhm.
that they can get whatever they want. And you're like, nope, that's not the situation. But so we've seen that, and I've seen the opposite side of that as well. I've seen some people that don't want to spend the money. They think that if they can return the money to the insurance company, that they'll be more gracious if they have another claim, or that they won't raise their premiums. And you're trying to
Yeah,
go through explaining both sides of these things. Listen, we need to
right.
go ahead and get you taken care of. We need to get you into a place. We're here to take care of you.
Yes.
But
Nobody's asking you to eat ramen noodles every night.
right, right, right.
Nobody's
Yeah.
asking you to do that, but both sides have to be reasonable.
Yeah, and so I've seen both sides. I saw an older gentleman that we worked with, and he was trying to save money. He was trying to save money on it. He was trying to.
Uh-huh.
I mean, his coverage would last. He could got a much nicer place, but he was like, no, I don't need all that. I'm just okay with this much cheaper place. We're like, okay, if
Oh,
that's what you want, let's do it. But
yeah.
he was certainly trying to save money for the insurance company, or I guess just not waste as much. And it's
Right.
like the concept, like you said earlier, maybe that thinking helps, is that it's we're all in this together in that sense,
Yes.
that if each one of these claims cost the insurance carrier $400,000 because it's a total loss or more
Mhm.
sometimes, then all of the premiums of everyone is going to go up. That's what happened in Florida
Mhm.
recently as well, is that all of these costs just went just sky high because
Mhm.
they had so much losses in that state, and yeah, they went up, and that's what you're seeing as well in California. I think a lot of carriers are pulling out of these markets
They
because it's
are.
too
Yes.
risky. I
They're
think
trimming off the fat, I can tell you that.
yeah, you told me about that earlier, so tell me more about
Yes.
that. So what, from the insurance perspective, what are they trying to do there?
When you are looking at certain states, you're looking at high risk, maybe weather related, such as Florida, speaking of them. Certainly the Carolinas. You're looking at hurricanes there, North South Carolina, especially Louisiana. They had Katrina, and if I am not mistaken, it was
Mhm.
exactly a year later or 2 years later to the day, they had another one blow through there and did
Yeah.
catastrophic damage. But you're looking at indemnifying out in the millions of dollars, sometimes billions.
Right.
But we were talking a little bit, we had touched earlier on the fraud side. You're looking at high risk, and it raises everyone's premium when that kind of nonsense goes on. And I can remember having a gentleman on the phone when I was over in the content unit, and they had been renters. He and his wife had been renters for years. And they finally found a house, and she fell in love with it. It was just what she wanted. And they could not put the homeowner's insurance on it. And he was telling me about it and how upset she was. And I could hear her in the background, and she was crying. And I said, "Put her on the phone with me and let me talk to her." And I explained to her, "It's okay. It's going to be okay. You're going to find another house. There's a reason for everything. And I believe that. And we are here for you if there's anything we can do to help you. Certainly, we want to insure your home, but find something that you really love again. You will." And from the human side of that. But I knew in my heart that a lot of the reason that those precious people could not afford homeowners insurance on the house they wanted was simply because the premiums are so high due to a lot of the fraud that goes on in the insurance industry, and it really just needs to stop.
Wow. Okay. That's interesting to hear about because these are people that they were trying to buy the house. Hey, at
Mhm.
least they did their research though. That
Yes.
was good on them to know the research and know that I can imagine, especially waterfront property in Florida,
Oh, yeah.
that is going to become an elitist zone in the sense that the only people that are going to be able to afford to live in some of these locations is the wealthy because it's going to get so expensive to insure that they're just going to have to be, financially independent, be it like millionaires or very wealthy people, because
Yeah.
it's so risky to insure there. When so tell me, okay, so more about the fraud. That's
But
I
insurance
guess I don't hear
companies
about that as
refuse
often.
to write them too. They just will not. If you're not so many feet or so many miles back away from the shoreline, they
Right,
just simply
right,
will not insure you. So
exactly.
that leaves the homeowner flapping in the breeze. So what that does also is it narrows the market down, and it doesn't
Mhm.
give them. So if you've got 3 or 4 insurance companies that are willing to write those types of properties, but the rest of them say, "No, I'm not gonna do that," they can name their price.
Yeah.
They can absolutely price gouge those name insureds and those homeowners, and then they're stuck having to pay the price because if they've got a mortgage on the home, they're gonna be required to have
Mhm.
homeowners insurance, a minimum of an HO3 basic policy. But yeah, the fraud is it can be anything. It can be someone who's filing a false claim. It can be, say, an adjuster who's not honest. I have a friend on YouTube. He's a very sweet man. He's been an adjuster, estimator for about 33, going on 34 years. Very educated man and sends me videos from time to time, but that is his area of expertise. He does SIU work with homeowners claims and just the things that you see. For example, let's say that a hailstorm blew through and somebody's roof really wasn't that damaged, but several houses in the area were,
Mhm.
and the homeowner or somebody gets up on the roof with a hammer, right?
Oh,
And they
wow.
start damaging, yeah, self-damage. The thing that you always wanna make sure that you do in any insurance claim is mitigate if you can. You definitely wanna
Mhm.
mitigate. But that is an incident right there that if that homeowner was ever caught doing something like that, you're looking at subrogation. Once they've been indemnified, then you're gonna go into subrogation and you're gonna ask for the money back. And a lot of those cases like that, they end up in litigation. They'll go to court and the insurance company ends up suing somebody for doing the damage. There's just a lot of things that people can do that are dishonest, and it drives the
Wow.
premiums up for the honest people. And it breaks my heart. And it happens over on the auto side too. It goes on everywhere and it's just so dishonest. And I
So what
just
happens on the auto side? Because I'm fascinated by that. I guess I don't hear about these or I don't think about these things
oh, absolutely.
as often, but
Say a fraudulent BI claim, right? "Oh, I hurt my neck and they didn't. Oh, I hurt my back and they didn't." If
oh,
they did,
wow.
then they
Okay.
did. But if they didn't, then they didn't. Yeah, claims that are hard to prove medically, right?
Mhm.
Say you've got somebody who is adjusting the claim and they're not honest, and they adjust it for X amount of money more than what it should be.
Wow, okay, so that that's just bizarre to me. Where's the incentive for them to adjust it for higher than it should be
Oh,
on the
absolutely.
adjuster side? Why would they do that?
Absolutely. Let's say that, for example, a door costs $2,000 on a vehicle to replace, and they
Okay.
write it and they say, "Okay, I'm gonna write it for 4,000. We're gonna replace that." What ends up happening is the insurance company cuts a check. They indemnify the insured, or what we call the PNI, or the primary name insured. And
Mhm.
let's say, for example, that several people take that extra 2 grand and they just split it, right?
What, between the adjuster and the, PNR?
Very possible.
Wow. Wow.
It's possible.
Okay.
It's certainly something that you have to look at, and that is why I am a firm believer in checks and balances.
Mhm.
Absolutely. I think that every adjuster, and this is just my opinion, but every adjuster, you have a reserve authority, right, that you can pay out, irregardless of whether you are asking for indemnity over top of that reserve authority or whether you're inside of it. Somebody, at minimum, this is my opinion only, of
Mhm.
2 people need to look at that payout before that check is ever cut or that deposit is ever made.
Yeah.
You can have one person, that first person may be honest, they may not be,
Right, but you're
but
less
for
likely you're gonna have 2
right,
people that are gonna be corrupted.
that is
Huh.
correct. That is
Huh.
correct, and that's my opinion. I don't see it, but you're
Really?
yeah, the more people that you have, the less of the chance that it's gonna be that we're gonna have a fraudulent issue.
Wow. Wow. Okay. This is really interesting. I was unaware. I feel so naive of these types of things. I was always under the impression that you would not see something like that on the carrier side or the adjuster side where they would do something like that. But I
Mhm,
guess in any case that people are handling money,
mhm.
there's a potential for this. There's potential for um,
Yes.
this type of thing. I guess at least this makes me trace my thoughts back to
Mhm,
when we first started your conversation and you told me
mhm,
about your father. I like that whole generation that lived in that time period.
mhm,
They had a totally different frame of thinking about things than
mhm.
we do now. They were more like public servants at the
Yes.
time. It was much more, I don't want to say community, but it was, they were all about the public good. And even Washington, D.C. was not a bad place at the time. It was a
Correct.
boring place, if I understand it correctly,
Yes.
but it was not what it is now. It seems to be extremely corrupt. At least it appears to be. Maybe I'm wrong, but it appears to be very corrupt all the way around. And so maybe this is like a larger factor in the sense that this kind of permeates throughout our society,
Mhm.
in the sense that all these people are kind, it's more just taking care of yourself. People are
Mhm.
looking out for themselves and a lot less about thinking about all of us together as a collective.
Correct.
The insurance company, if you take advantage of them, then it's not just one billionaire you're taking advantage of.
Mhm.
It's a collection of people, sometimes 10,000 or hundreds of thousands of people that essentially you're cheating out of
Correct.
their premium because they everyone's going to have to pay a higher premium because of what you've done. And so I just mean that frame of thinking, as in that
Yes.
it's not necessarily just one person looking out for themselves, but it's a whole culture, a whole society that's doing that, thinking like, okay, I'm just gonna look out for myself. And if I can make this work, I'll
Mhm.
do that without the thoughts of tomorrow or the down the road effects of what's going to happen 10 years down the road, 20 years down the road, or what's going to happen to everyone's premium
Correct.
after you've done that to them. I hear a lot of bad things about insurance companies in the sense that them denying coverage and denying claims,
Mhm.
but the way you're describing all this, it makes a lot more sense from a variety of different standpoints, but probably one of the biggest is that a lack of education, that the policyholders, whenever they're purchasing these things, they are unaware of what they really have. They don't know what's in their policy.
Mhm.
And then the fraud aspect of it, I rarely ever hear about
Mhm.
the fraud aspect of it, but it can be something so subtle that I think people don't really think it's wrong.
Correct.
Um, be it like what you're describing, as in the sense of going on your roof and seeing that you have some damage, but making sure that roof is really damaged
Right.
throughout. And
I
then
mean, yeah.
they'll justify it as in, I'm just making sure I get my coverage or something like that.
Mhm.
It's not it's not like you did arson, and that would be really frowned upon. I think not only from a standpoint of that this is wrong, but it endangers people's lives, things like that. That's a big red flag. People know that's wrong, but I don't necessarily think that people would see it as wrong if you already had some damage from hail,
Mhm.
and then you're
Mhm.
making it a little worse so that you can ensure that you get coverage. And the same thing with the auto side is, whenever they've been in an accident and they go ahead and exaggerate it. Let's say they do have some, but they want to milk it for everything they can get out of it.
Mhm.
And so they'll take a little bit extra and go ahead and, if they were okay with so many different months of treatment, they'll go ahead and go for more and more because, hey, they're going to try to get it as much as they can out of it. But all of that kind of stuff adds up, doesn't it?
It does, and a couple very interesting points that have piqued my interest about what you have said. A lot of people don't know this, and had I not been in the insurance business and not worked in claims, I would not have known this. If they already have, say, pre-existing damage on the house, that is gonna be taken into consideration, and Caleb, a field
Oh, right.
adjuster that knows his or her business, they can get up there and they can say, "This is old, this is new, that
Hmm.
over there is old, that's new." But that's taken into consideration on the indemnity of what we can repair. But here's the thing too. Let's say, for example, that there was some hail damage that was done to that roof. Let's say it was pristine before the storm,
Hmm.
and then there was. But that name insured thought, but there's not quite enough damage in their opinion because they don't work for the insurance industry. Okay, and they get up there and they do that. What's sad about it is that number one, they would have gotten indemnified. They may have even gotten a whole new roof. And number two, if you're caught doing fraud like that, you're going to get canceled. So not only are you not going to get your roof repaired, you're going to be out of homeowners insurance. That is going to follow you around in the databases, right?
Wow.
So if you go over to another insurance company and you have been accused of fraud and the insurance company can prove it, it's going to follow you everywhere you go trying to get homeowners insurance. And good luck with that because you're probably not going to get it again.
Wow. Okay. A couple of different major and interesting things by that, because you're
Hmm.
absolutely right. I mean, about this fraud, that if they do commit that, then yeah, that's going to
Hmm.
follow them around. But there's companies, a lot of public adjusters will do this. Some, let me say this very cautiously, some insurance carriers will do this as well.
Uh-huh.
Very few, but some insurance carriers will do this. Is they will do this, let's say, on an annual basis. This is very rare for an insurance carrier to do this, but they will actually come out and do like an assessment of your property.
Correct.
And this can be like having an inspector going on your roof, taking a look at different things around the property, notifying you about different things that you may want to take care of
Yes.
beforehand. And
A
let's,
safety issue too for the name insured. Could
yeah,
be, yeah,
exactly.
if you've got a
Like a
roof that's
tree
getting ready
that's
to
just
cave in.
about to fall over,
Correct.
or something like that. And they know about it in advance. They can just call an arborist, then come out and take care of that
Yeah.
tree.
It's
But
mitigation. It's beautiful.
yeah. So there are companies, I know a lot of public adjusters will do this, is they'll come out, like, you just call them up and say, hey, I need to take care of my roof or whatnot. They'll come out and do an inspection.
Mhm.
And there's one company that does this. They only do this commercial at this point, but they will take pictures of the entire roof line, take pictures of
Mhm.
everything, document it,
Mhm.
and then they track the storms. And so if there's a storm 4 years down the road, 3, 4 years
Mhm.
down the road, then as soon as the storm passes through their area, they'll come out and perform another inspection to
Mhm.
inspect the roof, see what type of damage it took, how much damage, different things like that, and then go ahead and help them out with the claim process. And so these things help because, just like you're pointing out, you have no idea what happened to that roof before. If the
Correct.
roof was older, or if it already had damage, then you're not necessarily owed any compensation for that. But if you've got a new roof or a newer roof and it has, I wouldn't say pristine, but has no damage, and then you have documentation of all these things. So you've got
Correct.
documentation of the roof line, how everything is looking before. And then, of course, there's a large hail event or something of the nature. It comes and
Mhm.
happens. Then you can file a claim. You're going to be much better prepared. You can say, hey, listen, here's the before. This was taken 4 months ago, and this is the after
Mhm.
the hail storm came through our area. And so, yeah, it's going to help you out. I think the more education, documentation, as we were talking about earlier, with going
Mhm.
and documenting your contents, making sure you have
Yes.
receipts for things. It's
Yes.
really, really important. But wow, it's really, I'm really glad to talk to you because you're really opened my eyes to a lot of different things. I never hear about the fraud side of things, but it does happen. We just don't
Yeah.
really, I don't think we think about it as often, but it certainly does happen. And even if they're just padding each claim by a few $1,000s, 5 or $10,000, that adds up a lot to everyone's policy, doesn't it?
It really does, exponentially it does, but if somebody files a claim and it's a blatant what's called a misrepresentation,
Hmm.
and a lot of people don't know this, any type of insurance fraud is a felony. It is a federal offense punishable by
Wow.
law. And what you do not want is you don't want your name in what's called the NICB database. You don't want to go there. That's a group of federal agents that work with SIUs, with insurance companies, and the state DOIs or the Department of Insurance, and they will prosecute. You don't want in their database. But you have to, with all of this stuff, you have to take into consideration what the intent was and if there even was any to begin with, right? Say, for example, somebody had an automobile accident and they did hurt their neck or their back or whatever and they quoted that, and we ended up seeing them through the emergency room, maybe some rehab, whatever. Let's say a month or 2 later, the pain went away, they're fine, right? That is not gonna be considered a fraudulent claim, by no means,
Right.
absolutely not. But if somebody is doing something with intent, then you're hurting everybody by doing that.
So these are things like saying that they're injured when they're clearly not.
That is correct.
Yeah. Wow.
Or or if you get on YouTube, you can see I watched a video a while back. It was 2 vehicles. One was it was like a little intersection in a like a suburbia type place, but there was a vehicle parked on the side of the road, and then another vehicle that was parked say you made a right-hand turn and parked on the side of the road there. They were in it together, and a car, unbeknownst to their knowledge, comes down the street toward the stop sign, and the one on the right-hand side of the straight part of the road, he runs out and hits this vehicle. They call the police, of course, and they say, "This person hit me as I was coming out, they weren't paying attention," and tried to claim not at fault. Or they'll do that and say, "I tell you what, if you'll give me 1,500 or $2,000 to fix my car, we won't file a police report." And the person is so shaken or they're not thinking at that time, and they're just going like writing a check to them because they
Wow.
don't want any problems. Or let's say that person's had a claim or 2 in the past and they know it's gonna, increase their premium. They're gonna write that check real fast, right?
Hmm.
But they shouldn't. Absolutely never. Anything like that, you wanna call the police. If anything else, they can call out what's called the Accident Reconstruction Unit if they need to. Those guys and gals are highly trained individuals that work with police departments, and that is exactly what they do. They reconstruct accidents, and they find out who's at fault and what happened. People are there's those types of people, they're scam artists, and they're doing what they're doing and fraudulent claims, or they'll have the person that they hit say, you know, "You file a claim with your insurance company, right?" And,
Hmm.
I have State Farm." Fine. You file a claim, and you have them repair my vehicle, right? And let's say that it's $1,000 worth of damage, but they're pretty doggone sure they're gonna get 1,500 or 2,000 out of it. So they've just made 500 to $1,000 on one scam.
Wow.
Yeah. So that you these are types of things that you have to see. And this is why I'm a firm believer in people having cameras. Utilizing those cameras is one of the first thing I ask over in claims. Are there any cameras? Do you have cameras?
Oh,
Did
wow. Yeah.
anybody see were there any witnesses to
Not many
this?
people in the US have cameras on their car, you think?
I'm more interested in surrounding area cameras. I'm more interested on,
Oh,
does somebody have a Ring camera on their door that might have seen it? What about the shopping mall? You said you were in a parking lot of a shopping mall, right? Do they have any cameras? I don't know. Let's get in touch with the management. Let's find out. And let's see if we can get
Wow.
footage of that. And once you get footage of that, you can find out a lot. You can see what's
Yeah.
happening. Right.
I have a quick story about that real quick.
Yeah.
Have had that happen to me as well, where someone asked to be paid out
Mhm.
after an accident. And then, but the one that was more bizarre to me was my sister. I don't know how many years ago this was, but she was involved in a very minor fender bender accident with a police car. I think it was a police car. I think he might have been off duty,
Mhm.
and he was the bribe. He was the con artist. He asked her for, I think it was $2,000,
Oh my
and he got
god.
it. Yeah, and then he was, in uniform, police, and so yeah, these things happen. I'm sure that those are probably much more common than I can imagine, because especially on a smaller accident, just a small fender bender, because
Mhm.
people don't want to file a report. They don't want to file a report. They know that if they do, that their insurance premiums are going to go up, and so then they'll do whatever they can come up with to avoid having to pay these premiums. But you're right, it's wrong, and you should file a report, and you shouldn't have to go through these type of situations. But it certainly happens.
And she was afraid to call another officer to the scene, I'm
Of course,
sure.
of
Was the
course.
officer deemed at fault, or was she at fault, or do we
I don't
know?
know. I don't know. I think she was at fault, but yeah, she was not going to call the police on that because he was the police.
Mhm.
And it happens to, whereas if they're not going to have to, you would assume that, and just creating that fear alone would be enough to make most people say, yeah, I'm not gonna call the police and report any of this, because you are the police. And then what are you going to
Ye
tell them that happens? And
yeah, I
yeah, she
understand.
just paid him off, but I
Mhm.
was even blown away by that. I was like, that's crazy.
Was it a police cruiser or like an undercover car, or was it his PV? Do you remember?
No, I wasn't even there. She just told me
Uh-huh.
about it third party. I would assume it was a personal vehicle, because if it was a cruiser, then
The
that would be
city
an
would have paid
entirely
for it,
different. Yeah, yeah,
or
entirely
the
different
county.
matter. And maybe I'm
Right.
wrong. Maybe it was. I don't know. I'm sure I'll ask her about this after this. But
Mhm.
I don't know the exact details. This is, like I say, several years ago, but it was really bizarre, because he was police at the time in uniform. I know that, and he did get paid, got paid off. You're, wow, this, if it was some kind of criminal or something like that, it's, these kind of things happen. But
And we don't know that he wasn't double indemnity on that too. Do you know what double indemnification is?
no, tell me about that.
That is something very interesting, and you can't do it. You can, but you're gonna get caught. But
Okay.
he may have taken the money from her and then turned around and filed a claim.
Oh,
You
oh,
cannot do that. You've either got to give the claim money back, or you've got to give the person who paid you their money back. You cannot be double indemnified on a claim.
wow,
It's the
wow.
same thing as if I have, say, for example, I have renter's insurance, right? And let's say that I have it with State Farm, and let's say that I have a renter's insurance with Allstate. Okay. So let's say, for example, that they paid out on a claim on my HO4, and it didn't cover all of my contents. And then I went over to Allstate and I said, I'm going to file a claim with you too for the same incident. You can't do that.
Mhm.
That's double indemnification. Um,
Wow.
and it's really frowned down upon. You could certainly ask them if you could do it, and their company may say, sure, you can do it. But as far as I know, you cannot do that. The claim's the claim, it goes into a database and we see the claim. But if you saw something, say the same person in the same day, and it flagged it, and this claim was paid by X insurance company and another one, right? Same name insured, same date, same address, same everything. That looks like a double indemnity, and it's certainly something that needs to be investigated.
Wow. Yeah, I'm sure these are things I just never think of that people do, but never really crossed my mind about all these things. I've just seen the cost of everything is going up, that we're seeing inflation. So the cost of repairs on the vehicles takes longer,
Yes.
and that's driving up the rates and everything like that. But I'm sure what you're saying makes a lot of sense as well, as in that's one of the factors driving everything up, that seeing all these
Yeah.
people committing fraud, different types as well. And I could
Mhm.
definitely see that in the sense of the smaller, I say smaller fraud, somebody that's has an auto accident and they're claiming the BI and saying that they're
Yes.
injured
Mhm.
when they're not. I could definitely see that happening, and I'm sure that does happen quite often. And then the same thing with the homeowner. I would think that homeowner would be very rare for them to do anything to their
Mhm.
home, but I'm sure you're correct in the sense that they do things that are just to ensure that they go ahead and get, like you're describing about a hell claim or something like that. And
Certainly.
then they go up on that roof and make sure that it's damaged so that they're going to go ahead and get a payout, as opposed to so much of it was damaged but wasn't really that bad, but they go ahead and really damage that roof all over to make sure that it's going to
Mhm.
pay out. And
Well,
so
the insurance companies have aerial photos of these roofs too, because your roof's one of the most expensive things on any kind of dwelling to replace. They have aerial photos of those. A lot of people don't realize that too, but it's public knowledge. But it's the same thing as the gentleman here a while back that had asked his neighbor to burn his house down because he could
what?
no longer pay for it.
When did this
Couldn't
happen or what?
This has been within the past 6 months, and I had
Okay.
actually befriended an attorney on LinkedIn that had alerted people to the case. He's an insurance attorney.
Okay.
And I PM'd him and I said, "This is just unbelievable." And he said, "It happens all the time." And I said, "It does, but," and I think it was somewhere that was very close to his hometown or his state. He was
Mhm.
in the vicinity of it. And I said, "I know that you would probably have a field day with this." And he said, "I absolutely would." But what happened was the guy that was asked to torch this other guy's house, he went to the police. He did the right thing. And he said, "He's asking me to commit insurance fraud." Offered me a settlement out of the indemnity. Yeah, and of course, he was prosecuted,
So
and
it didn't actually happen. They didn't actually go through with the arson.
no, but I often wonder to myself if he asked somebody else to do it. He
Right.
couldn't get neighbor number 1 to do it, did he ask neighbor number 2? Or did we put him in cuffs and have him in a jail cell before he had an opportunity to do that?
Wow. Wow. So
Mhm.
these type of things happen. That's crazy. I would think that would be very rare to happen, but it can and does happen, I'm sure, just like you're describing.
Mhm.
That's pretty crazy.
And
Like,
it's the same with
if he
car
wanted to
theft.
burn his house down, why didn't he just burn his house down himself? But he had to drag his neighbor into involved. Like,
That's the thing, and a lot of people don't realize too, fire battalion chiefs, they can usually, like, use an animal or use some type of a chemical, and they can find out if there's been accelerant used, and if they go into any type of a fire claim and they see that accelerant's been used, that would be directly related to that. That's a problem, okay? Let me give you an example. Let's say, for example, you've got, say, an accelerant out in the garage, but the fire happened in the back bedroom. That's not gonna matter. But if there's
right.
accelerant found at the scene of where the fire actually started, that's a problem.
Or at least it's going to cause an investigation. There was a reason you were legitimately doing something in the property,
Mhm.
remodeling
Correct.
something, because paint can be an accelerant. If I'm not correct, yeah, paint
Absolutely.
will burn. There's oil-based paints as well, and so that would be something that would be, I would presume, would happen. Is people would be painting and have a fire or something like that, and that would cause it to
Mhm.
accelerate. Another one was floors. Whenever you're remodeling wood floors, it is extremely explosive. This polyurethane. I
Oh,
think
yeah.
I did this years and years ago, but I had polyurethane floors on the wood floors, and
Mhm.
add a floor furnace as well. So this is an accident waiting to happen. Just this floor furnace
Yes.
kicking off, and all these fumes in the house.
Oh, yeah.
That could have certainly created a fire. But I saw this in advance. I made sure to shut the gas off to the house,
Oh,
opened
yeah.
all the windows, made sure to clear it out because I did not want to have a fire.
Very scary.
But something like that could happen to where you would have an accelerant, and it would make sense to have it. But I could definitely see, yeah, they're going to be suspicious. If you have an accelerant in your house fire, they're going to be like,
Yes.
we need to look into this. There's something suspicious.
And even with that situation that I had given you before, if it's the same accelerant, that in itself is suspicious, right? Even though they're in 2 different locations, that doesn't mean that it wasn't carried from one location to another within that residence. But it's certainly something you would wanna investigate. Even like a different type, any accelerant is something that needs to be investigated because it's just weird. If you find it at where the fire started, it's just weird. And I'm not saying that if you find an accelerant, that's gonna be a major problem. That's not necessarily true. It could be something that a chemical that seeped out, like you say, through the floor. It could be
Right.
something that came down through the drywall. You never in the insurance business, you never want to point the finger and start placing blame until you actually have your facts. And that's where
Right.
investigation comes in. And that's where you involve SIU with things like that and people that are highly trained in those areas to go in and do that investigation to find out exactly what happened.
Wow. That's really interesting. I
Hmm.
just I never hear about these type of things. Excellent. I think I've taken a lot of your time, Lesley, but I love this. You're really good to talk to.
Thank
You're
you.
very knowledgeable and a lot of different subject matters. So this is really interesting to talk to. You are very fun.
Thank
Yeah,
you.
if you want, we could schedule another one where we could follow up on a particular subject matter. Maybe we could do one just on fraud alone, where we just talk just about fraud and just cover different things about this that you know of or you've heard of or something like that. Because I
Mhm.
think it's something I just don't hear about. I guess that
Yeah,
from what you're describing, it really does happen, but it's just something I just don't hear about that often. So we can definitely look at scheduling another one.
you bet. I would love that.
Okay, okay, excellent, Leslie. But I've had a lot of fun with you, and I hope that you have as well. And I hope you're having a good Sunday.
Thank you so much. It was absolutely my pleasure being here, and thank you for having me.
Okay, you have a good one, Leslie.
You
Thanks.
too. Bye bye.
Hi, this is Caleb Owens with Premier Insurance Housing. Do you need help with ALE or temporary housing for your policyholders or clients? If so, we would love to help out. We offer a wide range of services, and we offer our services nationwide. We offer mobile homes and fifth wheels to single family homes and apartments. To request our services, just click the link in the description or give us a call 405 604 0786.